Shaq spit some game too. Man, I can't wait for y'all to hear that. Shaq spit some game. Toya, we coming to you. Unmute yourself. You've been unmuted. What's going on, Toya? Toya?
Guys, I've been learning a lot from you guys on the university.
Toya, can you speak up just a little bit?
Can you hear me?
Yeah, we can hear you.
Yeah, I can hear you.
Okay. Yeah, I was just saying thanks for the university is amazing. I've been learning so much. I was on the call Sunday, and we were just kind of talking about like building financial wealth in our communities, and how like this platform is creating a great resource. So I just really appreciate you guys.
Appreciate it. Thank you.
Thank you.
Yeah. My question, I am an investor. Like, I mean, I started out with just, like investing in my 401k, and then stuff like that. And then I've been kind of listening to you guys, paper trading. I did a few little day and swing trades, but I'm trying to be really cautious and be certain. Like I heard what you said about being cautious. It reminds me of the TV show Billionaire. I don't know if anybody watches that.
Billions?
Yeah.
Billions, yeah, that one. Where he says, he said, how certain are you? And it's like, he's like, I am not uncertain. He only does a trade if he is 100% certain. So I'm trying to like be like that. And I'm doing a lot of paper trading and studying. My question though, in the meantime, I want to continue to invest into my long-term trades. Like you're saying, like monthly, I have a budget where I just kind of save it and then I wait for time to get in. But my question about long-term investing is, how often do you look at those stocks? I know Ian was saying like kind of set it and forget it. But like, what are your triggers when you're like holding something super, super long, right? Like, do you just continue to hold forever, even if there's some like crazy event like last year or 2008? Do you have triggers set up to try to get out in those type of situations? Or do you just like literally like just set it and forget it? Like what would be a reason to get out of the long-term trade? I guess is another way to ask that.
If I can answer this. So we're talking about probabilities and billions, right? So Axelrod talked about only taking a trade or an investment if you know that you're going to win.
Yeah.
If you go look at this book called Simple Wealth, Josh talked about it, so I want to give him credit. If you hold an index fund for any 20-year period, 100% win rate across any American index. If you look at tech historically, any of the big 10, even if you extend to like the top 13 of any era, if you hold for 10 years and 6 months, you have an 85% probability of winning. This is the trick though. People are always incentivized to get you to sell, to either not have wins in your favor, because you're always competing against somebody in the market, either institutions, other families, cultures, right? The lack of willingness to not hold is the greatest detriment to us as a society. And you know what I mean when I say that. Because anybody who's holding for a short period of time, and that's why I always make the analogy, like if you're only holding for 2 years and I get you on a flip, but a lot of the income disparities over the last, let's say 20 years would have went away if we would have held for a lot longer. But there's a reason we were not told to hold. Everybody that I know that's a business person that is not my hue, they know this shit like the back of their hands, and it's not even their primary focus. Because the holy trinity of freedom is to have a business, real estate, and stocks. They're the same game. There's no reason to sell a quality company. You don't see Jeannie Buss. So what happened when Dr. Buss passed? He passed the business off to Jeannie. When Jeannie Buss passes, she's going to then pass it off to whoever is next in line in the family. That's why I always say, like, we have to look to hold these stocks for at least one generation if we really want generational wealth. Anything other than that is a trap. But we have seen this happen. Like, look at the Rockefeller family. Like, look at any major family that has some societal influence to this day. Those companies have been in existence for 100, 200 years. Unfortunately, we get told to think month to month, or at best case, 1 year out, or for our kids up until they get to college. Life starts when they graduate. That's why I say, like, for me, when I came up with two tech, two index, that had to work for 150 years. I'm thinking about Xander's grandchildren. That's just me. I'm straight.
Yeah. Toya, I'm with you. So the set it and forget it. I kind of, it's tough for me. And so I've made this very clear. Like, I'm on a goal to get 1,000 shares of Apple. And so I check that every day, but I'm only checking to see if I can get it at a better price. Right. So if I see the price get to a point where I can add to the position to increase that goal of getting to 1,000, then I'll make a move. And so I check it. I'm not watching it every second of the day, but I'll check it every day to say, all right, well, it's moving upwards or it's peeling back a little bit. Did it hit a point where I can add to the position? And so I guess I set it and I watch it. I don't forget it. So that's just kind of my strategy.
Okay. Yeah, I hear you. Like, it makes sense what you're saying. Both of you, because I get what you're saying as far as like trying to change your mindset to, instead of thinking about, okay, what can I get? Like, where can I get a flip where I can, like, get some gratification? Instead of thinking like that, thinking more like, okay, how well can I set up, my bloodline?
Or even just you. Like, even with me, the biggest mistake that, and I said it a couple of weeks ago, in 2020, I probably should have borrowed at least 500,000. Like, my net worth should have went negative. All these jackets and these cups, I should have licensed and sold all this, everything. And I invested a ton last year. Hindsight being 2020, my net worth should have went negative. Like, that's the one time I will agree with Grant. Like, when you have an edge, if I could have got a PPP loan and used it for investing at 2%, to the moon, right? But oftentimes we're looking to flip emotionally because we aren't doing what we need to do on a day-to-day basis, or we may hate our job. Yeah. So we want the gratification so we could then tell the boss or the partner that we don't like, hey, screw you, I'm done. But that's going to come. Even, and I know a lot of times when I tell you guys do it for a generation, but it has to start with you, because the biggest issue is I don't want to give this money to my kids and I don't benefit anything from it. For those of you that have invested, especially in the stuff that I've told you guys to, you've seen those returns happen in 6 months at most. So in 2 years, 3 years, like, life will be dramatically different for you. I promise you. Just hold it. But and I'm going to talk to you as a competitor. Can I be real with y'all? If I'm a competitor and let's say we're all racing to a number, if I can get you to sell your shares, I'm going to beat you. That's the greatest trick. Most people are checking into their account to then sell. The real trick is to not check in and hold for a long period of time, but people are going to tell you can trade your way to it and do other, and all this flip talk. All the people that are talking to you about flipping don't have no damn money. Go ask them how much debt they have. It's a lot of people making a lot of money, but they are actually negative because they're living off loans or living off credit card debt. You guys got to be careful and just ask basic questions. Are you debt free? How much do you have saved? And then also, if they have children, you can look at their children, and their children are a reflection of how well they're doing financially. It's easy to go lease a car and go stunt on IG. Then if the kids don't look well, that'll tell you everything that you need to know. Be mindful, but don't follow me. Follow what the top 1% have always done. Recreate that magic and you'll be good. I'm just telling you what I wish I knew at 18, 19, 20, 21, 22, 23.
Oh yeah, we appreciate you.
Thank you. I just want to ask one last thing really quick based on what you said. So based on what you said, as far as trying to benefit for yourself while you're alive, do you think it's wise to like leverage your net worth to use loans, like instead of liquidating your stocks? Okay, I'll step away. I know I took a lot of time.
No. And the only reason I say that debt is an endless trap, because anytime someone tells me that debt is good, I always ask them, well, if I paid it off for you today, would you let me? They always say yes. Even if the loan is at 1 point, I know, even if the loan is at 13%, I know how to get 13% a day. So that's my edge, my alpha, etc. For the average person, the thing that I will agree with Dave Ramsey, and he said some crazy stuff, and Grant doesn't like Dave, But the debt is dumb, cash is king. That's true. And it also dictates how you're able to do business. Because if I don't want to do a deal, look at every recording artist that are in loans with labels that do bad business with them and get shelved. They can't take care of themselves financially because they owe too much. That is a trap. And then for all of those of you that are spiritual and that read the Bible, go Google what the Bible has to say about that. You don't want to be enslaved to anybody. It's one of the greatest ways to control a population without having a gun to their head. And this is from a debt-free person who used to have debt and used to hate when that credit card bill came in the mail. And now it's good to see that balance at zero every month because I'm not using it.
Yeah, we gotta bring Grant Cardone on so he can debate you on that because he's yeah.
Something we could probably make happen.
He's the debt champion. He's the debt champion. He said a lot
Business
of things.
Debt and personal debt are different, but even with there's a lot of things about Grant that I like, and I get even the marketing angle why he hates Dave because they're talking to two different audiences. But I guarantee if BlackRock came to him and said, I'll let you keep all the, because he got a bunch of units here in Houston. You can keep all the units, but we as BlackRock will buy off or resolve all the debt, and you can have all those buildings debt free. He'll absolutely take that deal. Because then if you have no debt, any percentage gain that you get to the upside is profit. Like traders, the same thing. If I only take trades in which I know that I can make, let's say 2,500 per trade, if you can make 10 grand, but then you draw down 5,000, you're going to have a lot more stress than I'm going to have. So, but using it as a vehicle, and if he's getting it at 1.5% or 2%, I get it. But anything like tie 5% debt on, Grant got some deal. So like to have 5% debt on $300 million, 500 million, that shit would terrify me. That would terrify me. It does cause some stress. So, but each is on. But yeah, Grant should be on, so that'd be great.